Needham Channel viewers, and welcome to the 9th episode of Real Money Moves. I'm your host, Connor Gillen, and today we have two very special guests joining the show to share insight on their respective industries. One of our guests is Hunter Evers from CMG Mortgage Group. Hunter is a Needham resident with a deep understanding of our local market. He's been helping individuals and families achieve their dream of homeownership for years. We will also be welcoming on Jack MacNab, an insurance producer at Ironside Insurance in Boston. Jack is not just your average insurance producer. He's known for his unwavering work ethic and commitment to finding the best coverage for his clients. Let's dive into their industry insights. All right, first and foremost, gentlemen, I'd like to thank you guys for coming on and being in the studio today. And let's jump right in and explore some exciting topics in the world of real estate. Now, Hunter, I'll start with you. What types of mortgages do you offer, and which ones do you recommend to your first-time buyer clients?
So first and foremost, thank you, Connor, for having me. I appreciate it.
Yeah, of course.
Great opportunity. So when it comes to mortgage programs and mortgage types, some of the most popular, you have your standard 30-year fixed rate mortgage, which is what we call, your grandfather's mortgage. We also have access to variable rate mortgages. They're shorter terms, like 15-year mortgages, stuff like that. We're also doing FHA, first-time home buyer mortgages, VA loans and USDA loans. So we have, we pretty much have access to the entire catalog of loans that are out there. If you've heard of it, most likely we have it. But we're seeing it's very popular for first-time home buyers right now, first-time home buyer loans.
Awesome. So what are the current interest rates, and what strategies are people using to navigate today's marketplace, where we're seeing a little bit of a higher interest rate, a little bit of an inflated interest rate kind of marketplace right now? What are you seeing? What strategies are people using?
So generally, interest rates right now are going to be in probably the high 6s, low 7s, depending on your credit score, what type of property you're buying. Mm-hmm. There are a few pretty popular strategies. We're seeing people take out adjustable rate mortgages, kind of banking on the Fed cutting rates and bringing rates down over time. We're also seeing a little bit safer of a mortgage program. It's called a 2-1 buy down, or a temporary interest rate buy down. And what happens with a 2-1 buy down is the prospective buyer, their monthly payment starts 2 percentage points lower, or it's based off of 2 percentage points lower for the first year, and then 1 percentage point lower for the second year, hence the 2-1. And then come the third year, they'd get back to the market rate. Let's say that's like 6.8% right now. Then they'd be at the 6.8%. I did bring along a graphic that I would like to share with the viewers to kind of exemplify this and walk them through what this might look like on your average purchase. So in this graphic here, we have a purchase price of $729,000 with a 10% down payment. You'll see, again, we're going to go a little backwards here. You start in year 3, you'll see that's kind of like the base mortgage program, right? So $729,000, 10% down is going to get you a $656,100 loan amount. And then you have an interest rate of 6.5 or 6.5%, right? Now, when you look at year 1, you're going to see that interest rate, the payment is based off of 4.5% rather than that 6.5%. That's that 2-point reduction that your payment is based off of for the first year. Then going into year 2, you'll see that it goes up to 5.5%. And then year 3, you would get to your 6.5% payment, right? So we're seeing pretty considerable savings when you look at the all-in monthly payment on that bottom line there, $4,338 compared to $5,160 in year 3. And the way that this works is we actually calculate the savings, the total savings between the first 2 years and that third year. Mm-hmm. And we collect that money at closing. That could be paid for by the buyer, or the seller can give a concession for that.
Sure. And now once you're in that program, you're in that 2-1 program, so the first year your rate is down 2%. Then the second year your rate is down 1%. Could you refi out of that product midway through that loan, say, rates reset and are back in the mid-4s, you could refinance out of that product as well?
Exactly. And
Awesome.
based on how long you're in that program, let's say you're a year in and you go to refinance, whatever's left in that account that you funded at closing gets applied to your outstanding principal balance. You don't leave any money on the table.
Excellent.
Yeah.
So using numbers, if I put 10,000 toward it and then I only used 5,000 of that money and then I refied, I would get the $5,000 that I didn't use from that credit toward the mortgage, right? Toward the refinance or toward the principal balance.
Yeah, so let's say hypothetically you have a $650,000 outstanding balance when you refinance.
Sure.
And there's $5,000 left in that buy down account, then your mortgage amount at that time will come down to $645,000.
So what is the minimum down payment requirement that you require for these different types of loan programs?
So the minimum down payment would truly be 0%. We have down payment assistance programs that will help local first-time home buyers access up to $30,000 for down payment money.
Excellent.
And with that said, there is no minimum contribution from the buyer. So theoretically, it's 0% down where you're getting state-funded help or assistance. Yeah.
Yeah, and typically, what are you seeing for first-time buyers in your state? You know, the buyers that you're working with. What are they putting down typically for a down payment?
I'd say on average, probably anywhere around like 5 to 10%. There's a myth out there that 20% is the magic number, but in this market, especially recently, 20% is a large number to access as far as the down payment goes. So I tell people if you can get to 5, 10% and you have a decent credit score, your monthly payment should be manageable if you're thinking about buying a home. And if not, then we'll obviously kind of pivot them to a different price point where it is comfortable.
Yeah, or tailor, you know, a specific kind of program or a concession or anything toward their loan amount that might help them, might help it become more affordable.
Exactly, and to that point, we're dealing with elevated inflation levels, elevated interest rate levels, kind of elevated everything across the board right now with just the way that inflation is rearing its head and it won't go away. The Fed themselves, they're totally signaling at cutting rates and they really want to bring rates down. I did bring another graphic where you'll see that the Fed dot plot, which is in front of us here, when you look at year 2026 and beyond, the Fed fully plans to get their rates down to that 2.9 to 2.5 range long term. And when the Fed is at that range, you have a 30-year fix typically around 5.75% to 6%,
Okay.
which I think would be a rate that would bring a lot of buyers back into the market and also allow sellers to begin selling again, right? There's a huge spread right now between people sitting on 3 or 4% interest rates and the going market rates were high 6s right now.
Right. And do you have any solutions for current homeowners that are feeling trapped by this market right now?
So funny enough, right, the 2-1 buy down is really something that when people have all this equity built up in the home and they don't want to move into a much higher monthly payment, they're using that same strategy to keep the monthly payment low for the time being while we wait out the Fed and wait for these rate cuts.
That sounds like a nice program for current homeowners. Now, what about home equity lines of credit? Are those helping them out in times like today?
Yeah, so a lot of current homeowners at the same time, the 2-1 buy down, the temporary nature of it, sometimes it's not enough to kind of get them off the fence. So what we're seeing become ever so popular is really the home equity lines. And instead of going and trying to purchase the next home at a higher interest rate for the larger home at a higher price point, what a lot of current homeowners are doing is they're taking out home equity lines and they're actually doing the addition to the home or doing the renovations to the home or adding the room above the garage, stuff like that, and kind of making their current home what they are looking for anyway because it's so difficult out there and record low inventory.
Right, absolutely. Yeah, well, no, it's a plethora of great programs and opportunities that you offer. If you guys have any questions, feel free to reach out to Hunter directly with any of your mortgage needs. And now on to Mr. Jack MacNab here, who is our insurance producer. Now, Jack, what are the most common types of insurance policies that homeowners should consider if they're buying right now?
So first and foremost, thanks for having me on, Connor. I'm excited
absolutely.
and happy to be here.
Yeah, thanks for coming.
So the certain policies that homeowners should look at when they're purchasing their first home or whether they currently have one we recommend either the HO3 or the HO5. The difference between the two is the HO5 is normally more comprehensive, normally for higher net worth individuals or people with a home worth around $2 million or more. But the HO3 pretty much covers the exact same thing, all of your belongings, and the structure of the house itself or dwelling.
Awesome.
Yeah, and liability as well. Also, one thing I always recommend to my clients is an umbrella policy. It's normally very cheap. I mean, on average, it's around $200 a year per se, and it gives you an extra $1 million in coverage, and that covers your home as well as your auto. And bringing your auto into it, I would also recommend bundling, because you can normally save 20 to 40% when you bundle. Say your limits are $300,000 on your car, and you run into a Lamborghini that then hits a Range Rover. The damages are going to be a lot higher than $300,000. So that's when the extra umbrella policy comes in. The same thing happens with your house. You know, if someone were to come over, crack their head open, or get hurt in some type of way and end up suing you for everything you own, the umbrella policy saves you from the bank coming and taking everything you own. They also pay for your lawyer's expense and all of that.
Oh, excellent, excellent. Now, how does insurance play a role in the home buying process, and when should buyers start thinking about reaching out to get homeowners insurance?
Yeah, so insurance is kind of one of the last things home buyers normally look at. It's normally something like Hunter requires them to buy.
Of course, yeah, of course.
So, but I would recommend looking into it as soon as the offer is accepted on the home. And the thing with insurance rates is, they're changing every day. So we could get you locked in on a rate today, and in a month it could be way higher. But because we got you locked in a month before you're closing, that will be your rate.
So once they get an offer accepted, that's when you recommend a buyer reaches out to you.
Yeah.
They send you the accepted offer, some other paperwork, and then you begin processing. Their the different policies that would be applicable to their specific situation. Now, when these people reach out to you, could you also offer them, like you had mentioned before, hey, I know you're looking at these homeowners policies, but it might save you more money if you bundled your auto as well. Do you find that being common practice?
Yeah, definitely. Normally it's only like a 10, 15-minute conversation with the client, learning a little bit more about them, more about their property, and kind of just trying to get a full understanding of what they might need insured. And then, using my expertise to give them suggestions on what I think would best protect them and their family and their home and all their assets.
Excellent. Excellent.
And so, we always recommend bundling, always recommend getting umbrella insurance.
Excellent, excellent. And now, what factors can affect the cost of homeowners insurance for these buyers? And are there any way to save money on these premiums?
Yeah, first and foremost, the thing I mentioned before would be bundling. Like I said, you can normally save 20 to 40%. There are other factors that might bring the premium up, such as claims in the past 5 years. If your roof, electricity, or plumbing hasn't been updated in the past 15 to 20 years, normally our carriers, might see some kind of price change with that, as well as flood zones if you're in a flood. And one thing that a lot of people don't know is the type of dog you have. Say you have a German Shepherd or a Pit Bull or a Rottweiler or some type of dog that might have some sort of bite history. A lot of carriers will just straight up say, we're not going to rate your business. Luckily at Ironside, because we have so many different carriers, we have carriers that will write that for them. And a lot of our carriers will even just, accept a nice picture with the German Shepherd with your kids and family and be like, all right, we know this dog is not going to be a problem.
Right, awesome, awesome. And what advice would you give to homeowners to help them make informed decisions about their insurance needs and making sure that they do have the applicable policy for their home?
Yeah, first and foremost, I would say reach out to me because we have over 60 different carriers that we work with, and we go shop them around for you at no extra cost. We get paid by the carriers. I have so many people on my team that have been in the business for 10, 15 plus years and are truly experts in what they do. So they know exactly what they'll need. They're doing this every single day. We do all types of insurance, not just home, auto, umbrella, as well as anything for your commercial needs, whether that be a small business you own or investment property. Like I said, because we have so many carriers, we kind of have a wide variety of insurance that we can sell.
Thank you for tuning in to episode 9 of Real Money Moves. If you have any questions or miscellaneous real estate needs, please feel free to reach me at the contact info on your screen. I'd be delighted to help community members and Needham Channel viewers alike. Be sure to stay tuned for a special 10th episode coming this spring. I'm Connor Gillen from Real Money Moves, and I'll see you real soon.